Let's bring in the Schork Report publisher, Stephen Schork, to react to all of this, and in particular, Stephen, what we're seeing in the oil market.
Yeah, absolutely. We have to keep in mind, Cheryl, that Iran has finally received what it's been asking for the past year. In 2019, the country baited the hook numerous times, attacking U.S. drones, attacking oil shipping, mining the Strait of Hormuz, orchestrating the attack on the Saudi Aramco facility. And all of this was left without any sort of military response by the United States or Saudi Arabia, for that matter. So perhaps this emboldened Tehran. Now, as Osama bin Laden taught us 19 years ago, unchecked provocation only leads to further and greater provocation. So perhaps Iran thought they could take a trip down memory lane, go back to 1979, attack another U.S. embassy. Of course, their mistake is that Donald Trump is not Jimmy Carter, and now we do have a response. So the calculus has changed. In all the provocations in 2019, we did not get a lasting response in oil because there was no response by the United States. We are now beginning 2020. The calculus has changed. Oil prices have surged in response, as they ought to. The difference now between here and, say, the drone attack on Saudi Aramco in September is that we are now awaiting an overt response by Iran. So the ball's in their court. So we're going to sit here on tenterhooks until we receive what that response is going to be.
Hey, Stephen, Ryan Payne from Payne Capital here. Just a question for you. I mean, oil prices were already firming up. I mean, we clearly got over 60 over the last couple months. Is this just a sign that oil prices are probably going to firm even more going into the new year?
Well, certainly there's an upward swing, Ryan, on this. The concern now for higher oil prices is the market is not positioned for oil prices. When we look at the money flow in the option markets, a considerable amount of upside protection has been sold for the first 6 months in between $62 and $65.25. So now that is telling me that the option writers, who are typically the smartest people on Wall Street, were betting that we were not going to see prices much above that level. So now that has changed, and with that, when we get factor in the gamma risk coming into the option, and the market is ill prepared for that, we could see a significant sharp rally in oil prices as these positions are moved to cover.
Stephen, I'm wondering, in terms of the downside here, if there is a larger conflict resulting from this, I'm wondering if oil might be less affected than, well, certainly in the past, or than we might think, in terms of we've already had pretty aggressive sanctions on this country. We've been talking about how much U.S. energy production has been increasing in recent years. Even if this is more than a one-day event, is it possible that it's still not a huge event for oil markets?
Well, I do think it will be a huge event for oil markets, not per se what it would have been, say, 10 years ago when we were more an oil-based economy. Of course, now we are more of a natural gas-based economy. So certainly it's going to have an effect, but certainly to your point, not to the degree that you would have expected 10 years ago. I also am going to add that Iran is much more susceptible to oil prices than the United States. Iran only makes money one way. They sell oil. So we are dealing now with an economy here, the industrial side of the economy, 1/8 of the U.S. economy that I think is in recession. I think the European industrial economy and certainly Chinese economy are in recession. Higher oil prices will only exacerbate demand decay for crude oil, which will ultimately hurt hurt Iran much more than it will hurt the United States. So Iran is in a very difficult spot right now.
Omid, do you agree with that?
Yeah, I do to a certain extent. One country we have not talked about yet, though, is Russia, which is another huge oil producer and also derives a large part of its GDP from that. I'd be curious about your views on Russia's role, impact on them, and maybe briefly Saudi Arabia's.
Yeah, certainly. And what we've been talking about now to clients in the Schork Report for the past, 8 years or so was the growing chasm between the Sunni side of OPEC and the Shia side of OPEC. So on the Sunni side, we're talking, of course, the Sunni Arab world with a coordination with the Israelis and the United States. And, of course, on the other side are the Shia Persians backed by the Russians. So the lines have been drawn in the sand at this point. But, to that level, all these countries outside of the United States are wholly dependent on the sale of oil. So it precludes the Russian-Saudi situation of not escalating events in that region because they are all more vulnerable to upside prices. Now, they do want higher oil prices to a point, but you get to the level where higher oil prices, say in that $80 range, is only going to exacerbate demand decay on the industrial side, and furthermore will hasten the entry of alternative fuels into the market, which is ultimately long-term incredibly destructive to all of these economies.
Yeah, there's a lot of good points made. Stephen Schork. Stephen, thank you for being on this morning.
Thank you. Great to be here.